Thank you very much for inviting me to this. Monetary policy is something that I have worked on and dealt with for the last 30, 40 years. Indeed, the first book that I was involved in was called The Transmission of Inflation to Developing Economies, something that is referred to by Charan Singh in his book. So this is a subject matter that is of dear interest to me. Now, there are two aspects about monetary policy that I will talk about. The first aspect being the efficacy of monetary policy, and related to that, what are the determinants? How does money or knowledge about money supply, etc., monetary policy affect important variable, or the most important variable, which is inflation. There's also, of course, the belief that monetary policy affects growth, but that's not so controversial. What is controversial is, does monetary policy actually affect inflation? Now, you know, in India, we just brought in the inflation targeting in 2016, October. And there is a hypothesis, and perhaps one can get into it later, that we brought in inflation targeting after the horse had left the stable. In other words, when we no longer needed inflation targeting, we brought in inflation targeting. Indeed, the first country to bring in inflation targeting was New Zealand back in 1986, I believe. And New Zealand, just a few months ago, gave up on the entire idea of inflation targeting. So while we are starting on it, on inflation, there are two variables that are often attributed to inflation. One is money supply growth, and the other is fiscal deficits. Again, two subjects or two relationships that I examined quite thoroughly in Charan Singh's book. And let's look at the evidence on that. And I sort of have an open challenge to anybody to show me for any country, okay, over any reasonable period of time, whether the fiscal deficit is associated with inflation. So if you have knowledge of the fiscal deficit of an economy, and here, we constantly, our RBI constantly talks about fiscal deficits and so on and so forth. The rest of the world has gotten a bit soft on relating fiscal deficits to inflation, precisely because they failed to find any relationship between them. But the IMF clearly makes it a case of mentioning that fiscal deficits are going up, and therefore you have. And empirical tests have been done on this, and really it's very, very difficult to find any relationship whatsoever. One of the interesting, back in, 6 months ago, 8 months ago, the RBI published an article where they said that because of loan waivers, fiscal deficit will increase. The consolidated central fiscal deficit will increase by 100 basis points, and that will cause a 50 basis point increase in inflation. Okay. So this is an academic article which they cite in the Monetary Policy Report, etc. And the time period that they take for this is between 96 and 2014. Now, and it's quarterly data. Now we have, and a curious question arises, we have data, quarterly data from 1996. Anybody who's worked with quarterly data knows that we have, from 1996 onwards, quarterly data. And so the question arises, why didn't the RBI use that piece of evidence? They only started their analysis from 2006 to 2014. Well, a funny thing happened on the way to the forum, on the way to the analysis, is that if you take even 1 year prior, if the RBI in their econometric model had even taken data from 2005, they would have lost the statistical significance on the fiscal deficit. And if you go all the way back to 96, it just is no relationship between fiscal deficits and inflation for India. Okay. So one, I think, the empirical evidence is rather strong that fiscal deficits don't have much to do with inflation. You may not want fiscal deficits. I, for one, do not want fiscal deficits because the government is involved, and the government, by any day of the week or month or year, I would take a private sector decision-making process rather than a government decision. So I think there are good reasons to oppose fiscal deficits, but not the academic reason normally cited that this will lead to inflation. I would end with, there is an interesting chapter on debt management and whether the debt management should be part and parcel of the RBI, which it is. Now, so the chapter documents, so there's a lot of discussion about, debt management, whether it is helps in the independence of monetary policy or it doesn't, and if you will, what has been other countries' experience with having debt management as part of the central bank. So it's the central bank is, if the central bank does debt management, it's, it does the crime, it does the policing, it does the execution, it does the judgment. So you're setting interest rates and you're also borrowing and setting up the debt management strategy. Now, the curious thing I want to leave you with is that there are, I think, 14 reports, 14, count them, that India has had since 92, 93, or maybe a few years prior to that, on debt management in India. And these reports have all recommended that there should be an independent debt management office, independent of the central bank, including some real luminaries, and I mean luminaries in an important sense, really very, very, some of the brightest central bank governors that we've had, Y.V. Reddy, a very bright deputy governor, Rakesh Mohan, and then you have Raghuram Rajan. And the curious thing is that they all opposed, or they all proposed that debt management should be housed outside of the central bank. And the funny thing is, once they became central bank officials, they all proposed that, no, 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 that's a terrible idea. It should be housed within the RBI. So I don't know what happens in the gates of the RBI, but that's a reality that we face. So I want to end with that we are one of the very few countries in the world that, one of the very few important countries, that may be the only country, that has the debt management office within the central bank, and with the central bank having complete authority to determine interest rates and to determine the structure of your borrowing, which is what debt management is. So it's something for us to think about when we examine why it is that such an important function is left to the RBI, when its own proponents have said it should be moved out, except for the days when they were in the RBI, and that is the decision that we have to stay with. I'll stop there. Thank you very much.